Greetings, members one and all of the Salivation Nation. Blockchain, it can never be hacked. That's what's been said for quite some time in the crypto sphere. And of course, that is a little bit of a naive assumption, because what we're seeing now is a revelation of something a lot different. Once hailed as unhackable, blockchains are now getting hacked. Let's explore. This article was sent to me from Maple Hedgehog, and it's something that, I kind of had knew in my gut for quite a while, and from talking to certain people in information technology. Basically, if there are zeros and ones involved, essentially, they really can be hacked. Now, there are some systems that are more secure than others, and blockchain in and of itself is something that is quite secure, and obviously they're cryptic, hence the term cryptocurrency. And there's different forms of blockchains as well. There's also a new system that's been developed or is under development called Hashgraph, which is kind of fascinating. But before I continue with this article, I want to just make it clear that I like to keep an open mind in terms of where the state of money is and where it's going here in the United States and around the world. The idea of decentralization is fascinating, and I think that this is where the future is. And just because we're going to review and kind of take apart a bit, sort of what has been touted as being unhackable, that does not necessarily mean that I'm against cryptocurrencies. And it also, as I've said with other sort of vehicles from which to protect yourself and also invest, I'm not against the stock market. I'm not against investing. I'm not against diversification in any manner or form. And make no mistake, I think that's the one thing to be clear. But I think there is a level, and I think there's a portion of this that I think gives further bolstering of evidence that precious metals in and of themselves cannot be hacked because of their very nature, their intrinsic nature. And now, obviously, precious metals can be faked, but once you know you have real gold and once you know you have real silver, it is what it is. Once they're in your possession, the only risk you have is either losing them or having them stolen from you, which are very real risks, by the way. But notwithstanding, here we go. It looks like blockchains are getting hacked. Let's take a look at this. More and more security holes are appearing in cryptocurrency and smart contract platforms, and some are fundamental to the way they were built. This is a very recent article from last month, and says that earlier last month, which is January, the security team at Coinbase noticed something strange going on in Ethereum Classic, one of the cryptocurrencies people can buy and sell using Coinbase's popular exchange platform. Its blockchain, the history of all its transactions, was under attack. An attacker had somehow gained control of more than half of the network's computing power and was using it to rewrite the transaction history. That made it possible to spend the same cryptocurrency more than once, known as double spends. The attacker was spotted pulling this off to the tune of $1.1 million. Coinbase claims that no currency was actually stolen from any of its accounts. But a second popular exchange, Gate.io, has admitted that it wasn't so lucky, losing around $200,000 to the attacker, who strangely returned half of it days later. And going back to this double spend, that's essentially a hacker's version of quantitative easing in the cryptosphere. That is very interesting. And anyways, just a year ago, this nightmare scenario was mostly theoretical, but the so-called 51% attack against Ethereum Classic was just the latest in a series of recent attacks on blockchains that have heightened the stakes of the nascent industry, or nascent industry. In total, hackers have stolen nearly $2 billion worth of cryptocurrency since the beginning of 2017, mostly from exchanges. We all know about those. And that's just what has been revealed publicly. These are not just opportunistic lone attackers either. Sophisticated cybercrime organizations are now doing it too. Analyst firm Chainalytics recently said that just two groups, both of which are apparently still active, may have stolen a combined $1 billion from exchanges. We wouldn't be surprised blockchains are particularly attractive to thieves because fraudulent transactions can't be reversed, as they often can be in the traditional financial system. Besides that, we've long known that just as blockchains have unique security features, they have unique vulnerabilities as well. Marketing slogans and headlines that call the technology unhackable were dead wrong, sort of like the Titanic thing. And I've always questioned that. I've always thought that was a bit of a hubris statement to say that they were unhackable. That's been understood, at least in theory, since Bitcoin emerged a decade ago. But in the past year, amidst a Cambrian explosion of new cryptocurrency projects, we've started to see what this means in practice, and that these inherent weaknesses could mean for the future of blockchains and digital assets. And I do believe this is worth exploring further because of what's involved here. So, how do you hack a blockchain? And a blockchain is a cryptographic database maintained by a network of computers, each of which stores a copy of the most up-to-date version. A blockchain protocol is a set of rules that dictate how the computers in the network, called nodes, should verify new transactions and add them to the database. The protocol employs cryptography, game theory, and economics to create incentives for the nodes to work towards securing the network instead of attacking it for personal gain. If set up correctly, the system can make it extremely difficult and expensive to add false transactions, but relatively easy to verify valid ones. That's what made this technology so appealing to many industries, beginning with finance. Soon to launch services from big-name institutions like Fidelity Investments and Intercontinental Exchange, the owner of the New York Stock Exchange, will start to enmesh blockchains in its existing financial system. Even central banks are now looking into using them for new digital forms of national currency. But the more complex a blockchain system is, the more ways there are to make mistakes while setting it up. And that's somewhat separate from hacking, by the way, but it can lead to vulnerabilities. Earlier this month, the company in charge of Zcash, a cryptocurrency that uses extremely complicated math to let users transact in private, revealed that it had secretly fixed a subtle cryptographic flaw accidentally baked into the protocol. An attacker could have exploited it to make an unlimited counterfeit Zcash. Fortunately, no one seems to have actually done that. The protocol isn't the only thing that has to be secure. To trade cryptocurrency on your own or to run a node, you have to run a software client, which can also contain vulnerabilities. In September, developers of Bitcoin's main client, called Bitcoin Core, had to scramble to fix a bug that was also in secret that could have let attackers mint more Bitcoin than the system is supposed to allow. Still, most of the recent headline-grabbing hacks weren't attacks on the blockchain themselves, but on exchanges, the websites where people can buy, trade, and hold cryptocurrencies. And many of those heists could be blamed on poor basic security practices. That changed in January with the 51% hack against Ethereum Classic. So what about this 51% rule? Susceptibility to 51% attacks is inherent to most cryptocurrencies. That's because most are based on blockchains that use proof of work as their protocol for verifying transactions. In this process, also known as mining, nodes spent vast amounts of computing power to prove themselves trustworthy enough to add information about new transactions to the database. A miner who somehow gains control of a majority of the network's mining power can defraud other users by sending them payments and then creating an alternative version of the blockchain in which the payment never happened. This new version is called a fork. The attacker who controls most of the mining power can make the fork the authoritative version of the chain and then proceed to spend the same cryptocurrency again. For popular blockchains, attempting this sort of heist is likely to be extremely expensive. According to the website Crypto51, renting enough mining power to attack Bitcoin would currently cost more than $260,000 per hour, but it gets much cheaper quickly as you move down the list of the more than 1,500 cryptocurrencies out there. Slumping coin prices makes it less expensive since they can cause miners to turn off their machines, leaving networks with less protection. Towards the middle of 2018, attackers began springing 51% attacks on a series of relatively small, lightly traded coins, including Verge, Monocoin, and Bitcoin Gold, stealing an estimated $20 million in total. In the fall, hackers stole around $100,000 using a series of attacks on a currency called Vertcoin. The hit against Ethereum Classic, which netted more than $1 million, was a first against the top 20 currency. David Vorik, co-founder of the blockchain-based file storage platform SIA, predicts that 51% attacks will continue to grow in frequency and severity. And exchanges will take the brunt of the damage caused by the double spends. One thing driving this trend, he says, has been the rise of the so-called hash rate marketplaces, which attackers can use to rent computing power for attacks. Exchanges will ultimately need to be much more restrictive when selecting which cryptocurrencies to support. And this could be sort of the weeding out of the smaller currencies and maybe make Bitcoin and the larger currencies become more standardized. And who knows how that's going to work out. But nonetheless, a lot of energy is needed for blockchain to work. And that is a huge problem as well. And, not to say that the others, even Bitcoin, the blockchain behind Bitcoin, couldn't be vulnerable. Never say never. That's kind of where I'm going with this. And the article kind of continues. But really, in the long run, again, it's not to say that this technology is not secure. I believe it is, and I believe that there's a lot of placeholders or things in it. Nothing is ever perfect, and this just goes to show that. And I'm not encouraging people to get away from Bitcoin, but just don't put all of your eggs in one basket, and be careful and be wary, or any cryptocurrency. But it appears from this article that Bitcoin itself and the larger ones, because of the computing power, are more protected. But again, nothing, I believe, is completely foolproof. But on the same time, there's risk in everything we do in life, by the way. And holding precious metals can be risky. But by and large, you know that if it's in your possession, if you have gold and silver, you know that they're genuine. And if you get them tested and the like. And they can't be hacked. They can't be stolen and taken away from you by force or what have you, but they've got to get through your security measures, and there's a whole nother subject to discuss, because nothing in life is without risk. But by and large, I think this way, you have no control if the blockchain gets hacked, no matter what coin or bit or cryptocurrency you have. And I don't think that Bitcoin is foolproof, by the way, even based off of this. I mean, I think they'll find some ways and some sort of vulnerability to get in there. But by and large, I think the lesson from this is that, that it looks like blockchain isn't completely unhackable. And it also means, I think the other lesson to take away, and I think most in the crypto sphere, the most people that do invest in the cryptocurrencies, they're smart. They also diversify, and many of them are among us here in the community that stack silver and gold. And there's nothing wrong with that. And I would say continue to do that. Continue to diversify, and and that's the best way, because if one happens to fail, well, you have the other. And in this case, precious metals, I believe, is the ultimate fail-safe in this situation. You just have to understand the responsibility, and the threats will be different holding precious metals. So post your thoughts below. Again, I want to thank Maple Hedgehog for sending this along to me. Quite fascinating indeed. And would like to encourage you to please rate, share, comment, and subscribe.